What if the money you trust is quietly losing value, and most people don't even realize it yet? Lyn Alden is pointing to something deeper than just Bitcoin. She's exposing how the entire system works. Across the world, people aren't choosing money based on loyalty. They're choosing survival. They move from weaker currencies to stronger ones, always searching for something more stable, more scarce. But here's the problem. Every traditional currency, even the strongest ones, are slowly being diluted over time. And that's the part most investors ignore. So the real shift isn't just about Bitcoin going up. It's about a global realization that truly scarce assets are rare. Bitcoin isn't replacing money overnight, but it's positioning itself where the system is weakest. And once you see that, you start to understand why this matters more than most people think. Listen to how she breaks it down.
When we kind of analyze, like when people around the world look at money they want to hold, what they're ultimately looking for is usability and scarcity. And so there's a hierarchy out there. So if like people in Egypt, for example, they would rather generally hold dollars than Egyptian pounds because dollars lose value less quickly. So the Egyptian pound, the supply of those might increase by an average of 20% a year. Every year, just the number of pounds is going up by 20% a year. It's a huge runaway growth. So they say, I want to own dollars, and they can't put their finger on why, but the dollar is holding up better. And a lot of it's because the dollar is only growing by 7% per year on average. So instead of holding this thing that's growing by 20%, they want to hold the thing that's growing by 7%. And then gold is often people that you know, they live in the US, they live in the UK, they want an even scarcer money. They will often buy gold. And that, you know, the supply of that on average is based on most estimates increases only by about 2% per year, or even a little bit less around the whole world, as kind of miners, bring more out of the ground, refine it. We rarely ever lose much of the existing gold we have because it gets repurposed. So the supply of gold is growing by, say, 2% a year. But then the cost for that is volatility. So you can say, okay, I don't want to hold dollars, I want to hold gold. But in exchange for that kind of longer term appreciation, they have to take on the risk that it might be worth less in 3 years or 5 years, even though it's growing at a slower rate, just because it's volatile. More people buy it, more people sell it. It can get in a temporary bubble. It can get depressed. And so they can kind of start taking that kind of near-term risk to store their value quicker. And of course, real estate is an option. High-quality equities are an option. And Bitcoin, one of the advantages is that there's zero long-term supply growth. So if developing market currencies are growing by double digits a year, developed market currencies are growing by high single digits a year, gold is growing by 2% a year, Bitcoin's not growing at all after a certain point. And so as long as the technology functions, and as long as the network effects make it so that one currency kind of captures most of the market instead of, tons and tons and tons of currencies out there, they're holding something that's truly scarce, and it gives them certain resistances to debasement, with the cost being that just like gold can be volatile, Bitcoin being a smaller and newer and less understood asset is even more volatile. So it can go down sharply in a short period of time. But that's in exchange for holding something that's scarce and actually does protect your purchasing power over the 17 years that it's existed.
What if the one thing that makes money valuable is the one thing most systems can change at will? Lyn Alden is highlighting a quiet but critical difference. In the traditional system, supply can be expanded instantly. No resistance, no limits. But Bitcoin doesn't work like that. No switch to flip. No authority to override it. And that changes everything. At first, people doubted it, and they were right too. Most systems look stable until they suddenly aren't. They break slowly, then all at once. But Bitcoin didn't break. It kept running, year after year. And that's where the real signal is. Because the longer something survives without failing, the harder it becomes to ignore. Most people are still waiting for it to collapse. But what if the real story is that it hasn't? Listen closely to how she explains this.
One is just describing it as another way of running a ledger, right?
Okay.
So we talked before about how our currency systems are basically ledgers. So the central bank literally has effectively a spreadsheet. And then commercial banks build a second layer of spreadsheets that are on top of that central spreadsheet. And it's literally just a bunch of people in a room running this ledger. And Bitcoin is similar, except instead of like a council of a handful of people running that ledger, it's designed to be decentralized. So the rule set for how new coins are created, how coins are kind of transferred from one entity to another, that's all kind of distributed among the users of that currency. And then in order to move or add units, it takes energy to do so. So Bitcoin uses proof of work. So instead of with a fiat currency, you can just snap your fingers if you're the policymakers, and you can just add a lot of currency units to the system. With Bitcoin, no one has that capability, even the creator of it, if he's still around. No one has that capability. And so it's effectively just a way of using energy and code to run a decentralized ledger. And, in the beginning, I think it was right for people to not trust that it would be legitimate, because there have been multiple attempts at kind of private currencies in the past. The technology had to kind of show over time that it actually is stable. A system can seem like it's stable for a little while and kind of work until eventually some flaw just grows and then it eventually cascades. So I think it being around for a while, like the legitimacy comes partially from the Lindy effect, meaning that for many types of things, the longer it has existed, the longer it will continue to exist. That's true for most things other than life forms, because we have kind of an eventual end date. But whether it's a language, whether it's a cultural norm or something, that if something's been around for a while, there's usually a reason it's been around for a while. It's proven its stability through multiple kind of periods. And, Bitcoin's only 17 years old, but that's, in terms of technology, that's pretty old. And this, the longer it goes on, the more it proves that there is this decentralized ledger. It is working. It has pros and cons, just like any other type of money, but it is an alternative that people can hold. They can hold it, they can hold it in their own custody, and no one can debase it. And they just have to withstand the volatility that comes from holding that, as well as having some understanding of how the tech works, even though you don't have to know every detail, kind of like how we don't have to know every detail of the financial plumbing system to use dollars or pounds.
So it's certainly worth spending a little bit of time forgetting everything you've heard if it's negative and understanding Bitcoin a little bit.
I think in general, understanding money is really important. Whatever other work we do, whatever skill sets we have, we can't get away from money and its kind of impacts on us. And so I do think it pays to study money to some degree, to spend some hours to understand how money works. And that by extension includes Bitcoin, I think. I think any sort of reasonable study of money in the modern age, you can start with commodity money, gold and silver and other types of commodities. Then you can get to ledger money, fiat currencies, nation state money, bank money. But then in the current world, studying Bitcoin is I think really important, because it shows you what the alternatives are.
And if the current system is broken, if the money is broken, could Bitcoin be a system that replaces it?
I think it has the properties where it could. It would have to be much, much larger than it is now, and that would dampen the volatility. But really, there's nothing that would prevent it from working other than people. If you look at, the way it scales, Bitcoin can do about as many transactions per year as FedWire. So as the U.S. centralized system, it does about as many transactions per year, ironically, as Bitcoin. Yet it settles, and it sounds like a fake number, but $1 quadrillion a year and settles on the FedWire system. And then, of course, on top of that, you have all the banking system and things like that. And so Bitcoin has the capability to scale through layers. Those layers have already been developed. There's always kind of more research being done, but there is a layered stack that works. And I don't think people would turn to it until the existing systems fail, or at least at mass. Obviously early adopters do. But yeah, it's a functional system that can work instead of a centralized ledger.
If we are living through this slow systemic a decline that most people don't even yet recognize. What would you say people should be paying attention to on a daily basis right now?
I mean, it depends on what they do. To end on a slightly more optimistic note,
Yeah.
the financial system itself is in decline, meaning that we've built up all these high debt levels in our system, mainly through intergenerational promises, and the combination of a generation promising itself something and then not having the population growth that has made that as possible as they thought it would be. And now kind of the chickens coming home to roost, as it were. But underneath the surface, technology on average gets better over time. People have a lot more options now than they did decades ago in many parts of the world, at least most parts of the world. There's a lot to be grateful for. Not everything is in decline, even though our financial system is. People can get kind of trapped into the social media bubble and doom scrolling. But when you go outside and, focus on your health, focus on your family, focus on what's good in life, hopefully there's light at the end of the tunnel.
Have you looked at AI as a potential fix to this? Could that lead to the productivity boom and solve these financial problems?
Well, so the short answer is that the more productivity you have, the more it extends the current system before you have, say, a major inflationary reset. And so whether it was blue collar automation with the manufacturing automation, AI is basically that for more white collar type of work. It is a productivity boost over time. But it doesn't fundamentally change any of the things we talked about. And of course, it creates winners and losers. It gives people a lot more optionality to start businesses at a lower cost because now they have more tools available. It allows people to save money on things that used to be expensive to do. But also, there are people whose salaries are at risk of being devalued because they were trained in something that software can do more effective than it could, say, 5 years ago. And so they might have to shift to new things. So AI doesn't just magically fix any of what we talked about, but that's why policymakers, a lot of times they don't focus on addressing things now, because they hope that by growing the ledger at a moderate pace, they hope that enough technology will come online to keep disguising the inflationary kind of money supply that they're causing by having these productivity offsets. If productivity can go up by 5% a year instead of, say, 3% a year, it can hide that 7 or 8% money supply growth more effectively. But of course, it shows up in other pockets. You can't just print new homes. You can't print healthcare. You can't print energy. And software has kind of been a cheat code. When you look at old kind of science fiction movies, generally speaking, they overestimated how good our aerospace capabilities would be. They overestimated a lot of our mechanical growth of things, but they underestimated how powerful, in many ways, computers and screens and electronics could be. That's the part that's kind of surprised to the upside for many decades.